WPAY announced its first distribution, and I'll tell you if my recent yield prediction video was on target or if I missed badly. I also have updates on my margin balance and dividends from my small account portfolio. I'm on the hunt for an infinite stream of dividend income. It begins with my plan to turn $1,000 of Robinhood's money into $1,000 of my money. A few weeks ago, when Roundhill's new WPAY ETF went live, I calculated my estimate on the first distribution. WPAY is an ETF that invests in all 15 of Roundhill's weekly ETFs. It's a fund of funds, like what YMAX does with YieldMax ETFs. It's an intriguing fund since it provides diversification into Roundhill's single stock weekly funds. Remember, though, that the underlying weekly pay funds use 1.2 times leverage, so WPAY is essentially a leveraged fund. It started out with assets under management of $2.5 million as listed on Roundhill's website. In just a few weeks, that has increased to over $64 million. Robinhood only shows $37 million, but that is well above the $25 million threshold Robinhood set to be able to trade fractional shares. Robinhood still has it assigned a 100% margin maintenance ratio. Typically, this will last for 30 days, so in early October it may drop, and that will make it more desirable for margin plays if that interests you. Roundhill gave us the initial percentage weight and the number of shares when WPAY launched. I calculated the estimated distribution based on those numbers for different weeks, and the average came out to 51.11%. This week, WPAY announced the first distribution, and it came out to an annualized rate of 52.28%, which was very close to my prediction, only about 1% off. I'm glad to see this distribution percentage, not just because I was really close to the actual result, but because it shows some early stability in the distributions. I think this is a pretty good idea of what the yield will look like. I'm paying close attention to this fund as I'm considering buying it in another account. If you're new to the channel, I'll quickly explain my small account margin strategy. I'm using Robinhood Gold to get a free $1,000 margin loan. I pay $50 a year for Gold membership, primarily for the 3% IRA match. One of the Gold perks is a free $1,000 margin loan, which is central to my plan to transform $1,000 of Robinhood's money into $1,000 of my money. First, I purchased my foundation fund, PAAA. This is a stable fund with a yield better than what's typically available from high-yield savings accounts or Treasury bill ETFs. This stability is crucial because my small account is close to Robinhood's minimum of $2,000 for a margin loan. If my equity drops below $2,000, I would be subject to a margin call. And this happened already. I needed to pad my PAAA investment a little to get out of trouble. Check out my videos on margin jail for all of the details. I used my $1,000 of interest-free margin to buy 4 ultra-high-yield ETFs for $250 each. These are Misty, Snoy, Koi, and Nivy. I'm taking half of the dividends and reinvesting them back into the funds. I'm taking the other half of the dividends and buying my forever fund, SPY, until it reaches a balance of $1,000. Then I'll work to pay off the margin balance. My goal is to keep SPY forever. It's a NAV-stable ETF with solid yield and feels like something I can keep for decades. So that's my infinite dividend plan. If it works, I'll essentially get $1,000 of SPY for free. The first 5 videos I published have lots more detail. Now let's turn our attention to this week's updates. Nivy paid me 46 cents per share. The distributions have been steady since I invested, but this is the lowest payout I've received from this ETF. Still, it represents about 103% return, but it's only that high because the share price keeps falling. My yield on cost is more like 89%. Still good, but the last few weeks the distribution has been trending down. Here's a look at the dividend history since I made my initial investment. The scale of the chart implies more volatility than I felt. There's only about 4 cents difference from the high to the low. I appreciate the steady payouts, but that little downward slope in the most recent weeks has my attention. Hopefully next week we'll see a rebound. The Koi distribution shot back up this week to about 91 cents per share, which is well above 100% annualized. I had 92 cents left over from last week to invest. Last week's payout was so low that 50% of the amount was less than $1, and Robinhood requires at least $1 to invest. So I added that to this week's dividend. Here's a visual of the KOI dividend history, starting around my initial investment. These are much wider swings, with about 74 cents separating the high and the low. I wish these were more consistent, but overall it averages out pretty well. If I combine the two charts, you can really see how steady NIVI has been compared to KOI. Since Misty and Snowy pay monthly, I don't feel like there are enough data points yet to compare them to my weekly payers. I'm excited to share that my equity value rose to over $2,120 thanks to great returns at the end of the week. The reason this is exciting is because it pushed my margin buffer over 5%, so I dropped from Robinhood considering me at a high risk of a margin call to a low risk. Practically, there's not much of a difference, except as long as I'm over 5% buffer, I won't get the daily margin warning from Robinhood. It's a small win, but I'll happily take it and hope it lasts. If my account drops $20, I'll suddenly be high risk again. I noticed that after the Fed cut interest rates by a quarter point, Robinhood has already dropped their margin loan interest rates. Although I'm not paying interest in this portfolio, I'm impressed with these rates. I'm not sure you can beat 5.5% on margin under $50,000. As of now, Robinhood has left the interest earned for uninvested cash at 4%, which is nice for those with cash on the sidelines. Reminder that this $2,120 amount only represents the value of my PAAA investment, which I own outright, and the gains or losses on the ETFs I bought on margin. Unfortunately, I've lost value on the 4 margin ETFs, so this number is less than the value of PAAA. This may be easier to see on my total return spreadsheet. Here you can see the value of my PAAA investment is $2,188. The return on my 4 high-yield ETFs is currently minus $125. When you combine that negative $125 with the positive $58, you end up with negative $67. Then, if you combine the $2,188 with the negative $67, you end up with around $2,120, which is the amount you see on my Robinhood screen. The numbers are usually a little different between my Google spreadsheet and Robinhood, and that's because of the after-hours trading that shows up instantly in Robinhood and takes a while to get to Google Sheets. Overall, the account did pretty well this week, up about 1.2%. That was led by KOI, which was up almost 7%. Misty did well, up almost 4%. Snowy was up over 1%. And NIVI was down just a hair. So overall, the portfolio improved a good bit this week. Last week, it was overall down about 9.75%, and we've improved about 3 percentage points on that. So let me know in the comments, how did your portfolio do this week? Did you purchase any WPAY? If you found this video helpful or entertaining, please hit the like button and subscribe for future updates. And remember, none of this is financial, legal, or tax advice. I'm just inviting you along my journey. If you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.